The number one question on home buyers' minds: what credit score do I need to buy a house? In this video, I plan to save you hours of research and give you the real facts, no BS that you need to know for your next home purchase. We're going to review the basic loan types and what minimum scores are required. Loan types like FHA, VA, conventional, USDA, and even portfolio loans. And you want to stay tuned because at the end, I'm going to give you a bonus on the fastest way to increase your score, like 40 to 50 points. What credit score do you need to buy a house? First thing to know is not all credit scores are created equal. Check out this chart that I'm going to put on the screen. There's over 36 models of FICO. About 90% of lenders use FICO, so not all of them use the FICO score. And furthermore, check out a couple of the words on this chart: auto score, bank card score, different versions, version 2, version 4, version 9. Like, who can even keep track? So when you're out there pulling credit, how do you know if that version is the same as what a mortgage company is pulling? The number one thing that you need to know is that the score that you're seeing as a consumer on your credit card, when you go to get a car loan, is likely very different from the mortgage credit score that lenders are going to pull. That is lesson number one. So what's the best way to know your FICO? Check with a mortgage lender. Okay, here are the minimum FICO scores needed. We're gonna start with conventional loans. Conventional loans consist of about 53% of the entire mortgage market. Now, conventional loans are one of the hardest loans to qualify for in comparison to some of the government loans that we'll go over next. Conventional loans are more strict on scores, and the interest rate is definitely going to be determined on what your credit score is. So you want to make sure and stick around for at the end of the video. I'm going to give you the secret to increasing your score like 40 to 50 points. For 20% down or more, the minimum score on a conventional loan is 620. Now that is the middle score that we use, and it's the middle score of both borrowers, and the lowest score is used. So for example, let's say you have a 630 and your co-borrower has 670. We're going to use your 630 for the basis of the loan approval. So important thing to know. If you put less than 20% down, you can have a score down to 680. Now, some lenders will go to 660, but you start having issues with what we call PMI, which is private mortgage insurance. They're really strict on credit scores too. Ideally, if you're going to get a conventional loan, the secret to the best rate, the best PMI, and the best terms is to shoot for 740 or above. Now, lower scores aren't impossible, but you will pay a slightly higher rate when you are in those lower priced categories. Check out my video in the description about conventional loans to know if this is the right loan for you. Now we're going to go on to the government loans. We're going to start with an FHA loan, which consists of like 13% of the total mortgage market in the US. FHA stands for Federal Housing Administration. The minimum score for most lenders is 580. Again, that's the middle score of the lowest borrower. Now, some lenders will go down to 550. That's published on the FHA website, but it's 1 in 1,000 that'll do that. So when you can find them, there's strings attached. Anything below 600, you can expect that you need to have reserves, your monthly payment times a certain number of months of reserves after your closing costs and down payment are paid at closing. Now, you're also probably going to need to have low payment shock, meaning whatever payment you have now, if your payment is going up too high, like doubling or tripling, they may not approve you on the lower credit score on FHA. Furthermore, you're probably going to have some other compensating factors. Like I said, assets, job history. So beware if you're below 600 in that category. Now, to be safe on an FHA loan, ideally for the best interest rate and more lenient terms, I would shoot for 640 if it was me on an FHA loan. Check out my video in the description on FHA loans to see if that's the right loan for you. Now we're going to go on to another government loan, USDA. That stands for United States Department of Agriculture. This loan is limited in rural areas only. It's also limited on income. If you make too much money, you're not going to qualify. And it's the most strict of all the government loans. Now, you can check out this website, and I'll put it in the description as well, of USDA.gov, and how you can search if a property that you're looking at is in a USDA area. USDA does not state a specific minimum credit score, but most lenders are at about 620. Furthermore, USDA loans are very restrictive on debt to income ratio, and usually you can't have more than like 40%, 42% total debt. For this reason, USDA loans, because they're pretty restrictive, only account for about 4% of the mortgage market. I'll put the description down below of my USDA video about a USDA loan so you can learn a little bit more. VA loans, those are loans for our veterans. These are the most lenient on credit, as they should be, because our veterans fought for our country. We need to do what we can to help them out. Veteran loans, there's no minimum credit score that's dictated by VA, but most lenders set that limit at 580. And again, they're going to come with some strings attached if you're below 600. If you're between 580 and 599, usually you need to have some other compensating factors like low payment shock, some reserves, a few months reserves. Now remember that VA loans do not allow a co-borrower other than the spouse. So just to know, you can't use a co-borrower to help you out on credit on a VA loan. Be sure to watch my video below on VA loans to know a little bit more if that applies to you. And lastly, portfolio and also non-QM loans. It stands for non-qualified mortgage. So these are mortgages that are pretty much anything other than the ones that we mentioned. Now, these loans are special. They do special things, like it might only allow you to use bank statements for income, or it might kind of be no income and use a profit and loss, or it might have other ways of underwriting you that are outside of the box to help you qualify. Usually these types of loans, what we see is they want usually higher than a 680. If you get below a 680, that's where some higher interest rates are definitely going to come in. If you have questions about non-QM or portfolio loans, ask me down below. So to be safe, you want to shoot for a higher than 680 credit score on these types of loans. Okay, thanks for hanging out. You got it. Here's your bonus on how to get your credit score up fast. Credit cards is the highest and best use of getting your credit score up 40 to 50 points in a matter of 1 or 2 months. You want to make sure that when your statement cuts off, like my credit card statement cuts out on the 8th, for example, you want to make sure that on the 8th, when your new statement comes out, that your balance is 30% or below of your high credit limit. This is going to make sure that your percent utilization is as efficient as possible, and that's where most of the scoring points lie. 35% actually is in how you manage your credit cards. The other thing, don't have more than 2, 3 maximum credit cards, because that's going to hurt your credit too. I'll put the playlist below, more credit videos if you want to learn more about credit. Thanks for joining today. Good luck with your home purchase. Keep tuning in, and I'll talk to you soon.